What's going on? Welcome back to the channel. So today we're going to talk to you about SoFi. I want to go over some of the data points, break it down on what really moved in, go over everything else you need to know. But first, make sure to hit that thumbs up. And with that, let's get right to it. So SoFi had a little bit more of an interesting start. Did close very strong near the end of the day, up 1.34%, 29.86 a low, 30.99 the high. So kind of closed at the, I guess, intraday high, which is always a good thing to kind of transition into tomorrow. But we did see somewhat low volume. So 63 million shares being traded, 79 is the average. So this morning was interesting because SoFi put out the highly anticipated crypto news that everyone's been talking pretty much since beginning of 2025 about. And so this came out at 8 a.m. SoFi Bank becomes the first and only nationally chartered bank to launch cryptocurrency trading for consumers. So it looks like they're going to be starting with just some of the basics. So Bitcoin, Ethereum, Solana. And so, of course, I think it also mentions that it's going to be rolled out periodically to all of its members. But this was exactly what people kind of were waiting for. Anthony as well was on CNBC, so he did an interview. I'll play that near the end of the video. But the fact that SoFi just didn't burst higher leads me to believe that this was already fully priced in. A lot of people on social media were saying, hey, like, what's up with SoFi? As per usual, it goes down. I think just everyone knew that this was coming out. SoFi insiders posted a lot of kind of cryptic things. And plus, Anthony's been doing a lot of Easter eggs over the last 2 months saying that cryptocurrency is coming, blah, blah, blah. So I think the writing was kind of on the wall. At the same time, there was some fairly bad data that did come out, and that was ADP employment. The weekly did come in at negative 11,000, and no different than last week's Challenger job cuts. The market wants negative, not very negative. And so this did come in very negative. And even though technically this did increase slightly the likelihood of a 25 basis point cut for the upcoming meeting. So now there's a 67.5% likelihood versus yesterday it was only 62.4. Still, it did cause a lot of fear. As well, Goldman did come out early on this morning, piggybacked off of that fear and just said that the US likely lost around 50,000 jobs in October. The largest drop since 2020. So a lot of that did cause kind of a domino effect in the broader market. And so this is why, despite SoFi's very highly anticipated news, you kind of had it lagging. So it was an interesting morning for those of you that were waiting for that news for a while. Definitely the market gave you an opportunity to get in a little bit cheaper, but nonetheless though, I feel given the momentum behind the scenes and the big institutional transactions that kind of followed, big things are going to be coming. From a technical standpoint, Elliot Wave technicals, it does have a pivot point of 27.16. So for as long as it is able to kind of stay above that, then in theory, between $37 and $39 is on the table. So definitely good to see for that. So seeing $40 in the short term would be pretty epic, mind you. Aside from that though, you also had Anthony really pushing that. So he's done quite a few posts today, just really hyping up investors. And this is something that a lot of people, even kind of yesterday, people were calling out Anthony for not commenting as much as Vlad. But nonetheless, definitely good stuff was announced today. Aside from that, shorts didn't really do all that much. So 99.6 million shares overall are being shorted, works out to be 8.4% of the free float. So shorts didn't do all that much. If anything, 34 million in calls, 7.5 in puts, and then 45% of all the options being done were bearish in nature. Most of that, I do believe, was in the first half of the trading day when the market was very fearful. So big money was kind of betting that SoFi was going to go down with a lot of the other fintechs, but luckily enough, SoFi was just saying F you and kind of moved higher. From a bull standpoint, you see a consensus for it to now be kind of between that $32 and $33 range by the end of this Friday. So good stuff for that. Bears are anticipating for it to be sub 29.50. So even the bears are starting to become more and more optimistic, as weird as that sounds, but they keep moving up their kind of expectations. Even I think over my weekend video, they were originally assuming that 27 was on the table. Now it's 29.50 to pretty much $30. These are some of the big transactions that did occur on the secondary market. So big one, 12.3, 3.08, and then 3.02. So I feel like this is what really kickstarted the sell-off, as weird as it sounds, or why institutions would sell, but there was one big one, 12.3 million. So that's one thing that really caused that initial dip. Aside from that, these are some of the transactions that did occur on the dark pool above $100,000. So the big one for today was 7.77. So lucky 777. So that's definitely maybe a good sign that SoFi, big things are going to be coming for SoFi, which conveniently, actually completely unrelated to SoFi. For those of you that follow some of my other YouTube channels, I cover NEO. NEO just had, I think it was 2 consecutive days, 6.66 million in kind of dark pool transactions, and they are really kind of crapping the bed. So maybe this 777 is lucky, and SoFi is going to hit that $40 range. Obviously, you know how that works, but nonetheless, 6.1 million and then 3.2 and so forth. So big money was definitely getting in today, with it closing at 30.95. It is trading between this R2 and this R1. So 30.49 was supposed to be that key pivot that you really wanted to watch SoFi to get over today. It completely blew past that like it was nothing. So the next strong target is going to be 31.81, and then that 30.49 is going to be now support level, as well as 28.37. But I don't really anticipate that to be hit, especially with the shutdown still technically on. That does mean a lot of the key labor data for the second half of the week is going to be paused. But aside from that, though, quickly popping over to the chart, things are looking pretty a-okay. As I even mentioned in my last couple of videos, it is above that 10-day moving average. A lot of willing buyers. You can see that from the market position. Because of that recent negative volatility that over the last couple of days leading up to pretty much last Friday, that did completely reset the stochastic RSI. So went from overbought to now oversold, slightly breaking off of that, but still nonetheless a lot of good opportunity for SoFi to kind of really move higher. Aside from that, though, you see a lot of articles really coming out talking about SoFi, so most likely that should add some level of kind of algorithmic trading really pump at the end of the day, because of course, based on what I mentioned for the overall volume, just on the secondary market and the dark pool, it didn't add up. So AI definitely was kind of a main force from that, and you can see that from the flow. So a lot of the smaller transactions right here, that is just AI and algorithmic trading. Potentially as well, what might be coming down the pipeline is new analyst ratings, kind of digesting the new information. So cryptocurrency. So let me know your thoughts on SoFi. Did you buy today? Did you sell? I know a lot of people did sell today from what I can see on social media. Just people were very just crapping themselves, which is kind of weird because it's not like we've had not like a crazy volatile day in the past. Today was no different than just people worried about consumers as per usual. So I don't know. Let me know your general thoughts on SoFi. As long as you make money, that's kind of the end game. As long as you're not overly leveraged with margin or whatever else, as long as people make money, I'm not going to hate on them for selling or anything. That's kind of the name of the game, right? So with all that, I appreciate all you watching. One final thing though, pop over to my Patreon if you're looking for some solid buy signals on stocks, options, crypto. Put out daily day trades, numerous swing trades. Worthwhile to pop over there and check that out. With all that said, appreciate all of you watching.
New this morning, we got the guy at the desk. SoFi launching crypto trading on its platform. Joining us right now, first on CNBC, is SoFi CEO Anthony Noto in town. It's nice to see you, sir, in person.
Good to see you as well.
Okay, so what's going on here? This is a big deal.
Yeah, this morning,
a very big deal for you.
It is a very big deal. It's a big day and a big milestone. Reverses the course of time.
It does.
We've wanted to be a one-stop shop for all your financial services needs, and one of the holes we've had for the last 2 years was in cryptocurrency, the ability to buy, sell, and hold crypto. We were not allowed to do that as a bank. It was not permissible. But in March of this year, the OCC came out with an interpretive letter that it's now permissible for banks like SoFi to offer cryptocurrencies. So this morning we're launching as the only national bank, the first and only national bank, the opportunity to buy, sell, and hold cryptocurrencies like Bitcoin, Ethereum, and Solana.
So I was going to ask, are we just talking about 3 for now?
We'll expand well beyond 3. It'll be a pretty broad assortment. We try to differentiate on being fast, having broad selection, great prices, ease of use. So we'll try to give members, SoFi members, as much selection as they would like.
And what's the difference between going through you and going through Coinbase or going through Robinhood or somebody else?
Yeah, there's a couple of really big differences. First, we're a nationally chartered bank, which means we have the infrastructure, the processes, the financial conditions that provides the safeguards that a consumer would expect from a bank, which is going to allow us to scale responsibly. The second thing is because we are a one-stop shop, you can do all your banking, checking and savings at SoFi, your borrowing and your investing, and now crypto. And one of the unique things about that is when you come to SoFi and fund your crypto investments, you'll fund them in a SoFi checking and savings account. That checking and savings account's deposits earn interest.
Say that again. You're going to fund it with crypto?
You're going to fund
your checking account.
You're going to fund your checking account with cash.
Okay.
And then when you buy Bitcoin or Solana or Ethereum, the money will come straight out of your checking and savings account. So when you're not putting cash to work, it's not sitting in an account that earns no interest, and it's not sitting in an account that's not insured. So the money will sit in an FDIC-insured account. Up to $2 million is what we offer. And when you buy, it will instantly withdraw from that account and send it to the marketplace.
Okay, so here's a question. This seems novel in this moment. If we're sitting here a year from now, given this OCC decision and every other bank in this country, how novel will this ultimately be? Meaning, do you imagine Bank of America and JP Morgan and every bank, Wells Fargo, all the big banks and everybody else will be doing exactly this?
I don't. And a couple of reasons for that. We're the only digital one-stop shop. They do not offer the breadth of products that we offer across borrowing, saving, investing, protecting, and spending. So we have the ability to not just buy cryptocurrency, but we're now providing the ability to send payments internationally via the Lightning Network, which is a crypto network, and we'll add others to that.
Why can't they? Why can't some of these sort of more traditional legacy banks do the same thing?
They'll have to answer why. I fundamentally believe that we put the member at the center of that what we do, and we focus on these things that are activities to do with your money, not products. And so the SoFi Money account is an account that you can use for international remittance, you could use for self-serve wires, you can now use for crypto buying, you could use for paying friends via an email and Zelle. And so the whole idea is to leverage technology to make moving your money as easy as possible, but also doing all the other things you need to do to get your money right.
Let me show you. Can we just put Bitcoin up on the screen for a second? So we're at about, what, 105,000 today? I don't know where we were.
104 and change.
So what do you make, though, of how your new your clients who may be buying this should be thinking about this? Should it be digital gold? Should it be a speculative asset that they're sort of trading? What do you think of this?
The first thing is we've asked our members what they want, and 60% of them have said they would like to invest in crypto, but they want to do it from a regulated entity like a bank, and that's what we are, and so that's one differentiation. The second is it is a highly risky asset. It should be a very, very small piece of a total portfolio, and people should dollar cost average into it and make sure they stay very diversified. Because it is risky and it is volatile, you could lose all of your money, and we want to make sure that our members understand that. But they do want exposure to that, just like people wanted exposure to Amazon back in the mid-90s. Risky, now it's $1 trillion company.
What is your exposure to all of this in terms of the risk to the system? If everybody were to do what you're doing, what kind of exposure would ultimately the taxpayer have if all of this, if Bitcoin goes from this to, loses 50% of its value?
It's like any asset. If it becomes overvalued, that risk increases increasingly over time. If there's a lack of liquidity, that risk increases, and those are all things members should understand. We provide education on the platform. In fact, when we used to provide cryptocurrency investing, we would have a warning just before you hit buy that said, this is a risky asset, you could lose all of your money. In our press release, we say that exact same thing today. So it's just another asset that's not proven over the course of centuries, that will take time to level out and become more stable from a price and valuation standpoint.
Can I ask, does the Noto family invest in crypto right now?
Yes, we do. I have about 3% of my investable assets in cryptocurrency.
Mostly in Bitcoin, or what's the...
Mostly in Bitcoin.
And were you early?
I was not super early. We've done perfectly fine. We have exposure to it because, one, I believe we're investing in a technology, not in a currency. The analogy I use with people is imagine if in 1990 you could have bought a piece of the World Wide Web through some coin called the World Wide Web coin. It's very similar to that. These are networks, they're communication networks used for payments and other applications.
What do you make? We were talking to Cathie Wood. Was it just this week? Last week. I guess it's Tuesday. Last week we were talking to Cathie Wood. And she, has had a very sort of sky-high valuation for Bitcoin. I think it was $1.5 million she thought it could ultimately get to. She took that down, interestingly, last week and suggested that the success of stablecoin is so much higher than she thought that in some ways stablecoins for transactions could ultimately crowd out Bitcoin that might have been used for that.
Big picture, we believe blockchain and cryptocurrencies are a super cycle, technology super cycle, just like AI, and it will be pervasive across all the financial system. Stablecoins is one example that will fundamentally change payments. SoFi will launch SoFi USD, hopefully in January. That will be backed dollar for dollar by reserves. Because we are a bank, we'll actually put the dollars in our Fed bank account, so we'll have no liquidity risk, no credit risk, and earn Fed funds. That's a really attractive vehicle for people to use digital currency for, and that will compete with other digital currencies. It's not clear who will be the winner. Stablecoins are one example, but if there's a huge proliferation of stablecoins and they don't have the liquidity that I mentioned, they don't have the credit risk and duration risk, that could become a very risky asset also.
Should we worry about stablecoins in the following way, which is that hopefully if the stablecoins are backed by something meaningful like treasuries, that effectively takes treasuries out of the game to be lent in a different way?
Yeah, I actually worry quite significantly about stablecoins from operators that are not banks. Where are the reserves sitting? Is there duration risk for those reserves? Is there credit risk for those reserves? Are those reserves bankruptcy remote? SoFi, the answer to that is zero credit risk, zero liquidity risk, and working on bankruptcy remote. That's three elements that you have to think about with whatever stablecoin you use. Just because it's backed dollar for dollar doesn't mean those dollars will be there when you try to liquidate, just like a money market fund that breaks a buck.